Now, the market has a funny way of confounding expectations. Everyone's been bracing for a big sell-off on Trump's tariffs. But as my guest today, Callum Newman, points out, and he points this out in his piece today in Factel Daily, we've got one day of drama and then, well, not much. There's an important lesson here about how markets price in the obvious while blindsiding us with the unexpected. But there's also a pretty useful advantage you can take away that any investor, especially those interested in mining stocks, could use. Now, this is a concept called the Lassonde curve that could help investors spot ideal entry points in mining stocks. And it's particularly relevant now that we're seeing some interesting movements in the copper market. So, Callum, welcome, buddy.
Thank you, Woody. Good to be with you.
Yeah, cool. Well, let's dive into this Lassonde curve concept. You've had some success applying this framework with stocks like in Bellevue Gold, Spartan Resources. Can you walk us through how this approach could help maybe traders, but maybe someone with a shorter term or maybe a medium term approach identify potential winners or more likely winners in what is pretty a high risk space?
Absolutely. Not only is it high risk, but it's also a really long timeline for any mining project to go from discovery through to production. We're talking years, sometimes 5 to 10 years, even more so. So the Lassonde curve is a theoretical concept where basically to try and time what's going on in that kind of story, you either have the very start where you've got upside potential from the exploration. Somebody goes out and drills a particular target and they hit something big, then you're going to get a big spike up if the market really likes it and it's significant. Then, of course, once the geologists and the company realize that they have something there, they have to then prove it out and do more drilling. And then if they think they've got a viable deposit, then there's permitting and financing. And it's a very long environmental stuff. If it's in Australia, there's the native title stuff. So all these things require permitting and processes that aren't fast. So often what happens is you'll get a big spike on the initial discovery. That's the first phase of the curve. And then the stock price will moderate down unless they have more big success in the drilling side as the company does that sort of long and boring permitting and financing.
I guess expensive too, right?
Expensive. So they've got to raise money and they've got to go and spend it and all that type of thing. So if you're interested in now, of course, you can hold through the whole thing if you've got lots of time and money and you're just happy to sit with it. But, you could be sitting with it for a long time, presuming that it all comes together at the end as well. The Lassonde curve suggests, well, look, you can try and have a crack at that first bit and then you can sort of chop out the middle bit by not being in the stock in that boring sideways phase. And just as it comes towards production, the market, if the particular commodity is still making the project viable, will start to bid up on the stock as it de-risks. So that's the next upswing that you can get in the stock. So what I'm saying today is that in my latest issue for the Australian Small Cap Investigator, we have gone into a stock with that framework in mind.
Yeah, you also draw an interesting parallel between gold breaking away from other metals and copper's potential to follow suit. Can you talk about that? Like, what is that? So that's where you see the next opportunity in the copper market.
Well, you've got to put it in the context of today's market. So everybody, again, you alluded to the tariffs, the thought of a big sell-off, the idea that Trump would hit China. So as of now, he did come out with the tariffs on China, but it hasn't really rattled the market in that sense. So what we're saying is that particular move, the market expected it. It wasn't shocked by that. But both iron ore and copper are thus far, I'm talking about the futures market here, holding up under the pressure. So even though China's economy is supposed to be in the dumps and the real estate is supposed to be terrible and Trump's hitting them, well, iron ore and copper, two of the key imports that they basically the buyer for in the global market, are holding up. So that is giving us a clue that, well, maybe we should be looking at copper, because further back, everybody has said copper's going to go into a massive bull run for the last probably 10 years. Every year somebody comes out and says it, but it's never happened. Maybe this year's the year. However, as long as that price holds now, any copper project that has a viable pathway in the next 12 months to get copper out the door and start cashing in on that price is going to be attractive to resources investors. And I think I've got a very, very good one to play that curve with copper in mind.
Yeah, cool. And I guess that's where the Lassonde curve would come in, right? To time, does it time well with
Yes.
one of the
This
one?
particular one is 6 months away if they hit their timeline of being into production, and the market will usually bid on a resource stock before it goes into production, before it does its first pour. So as long as it's got line of sight that cash flow is coming, the analysts and that can begin to price in the future year's profitability of the operation.
So that's on the more riskier end of the scale. You also mentioned picking up some FMG Fortescue shares recently
Yes,
for the yield.
yes.
How go on?
Well, it's just in the Fat Tail Daily in the last few weeks, I've written about this idea that the iron ore and FMG and even BHP and Rio were all sold down on the expectation that Trump would hit China, but by the start of this year, that was in the price. So I made the case that, well, you can look to go the other way. All we need to see is iron ore hold above or around $100 a ton. That's good enough for them, certainly for Fortescue to still be very profitable.
Mm-hmm.
And you might get a bounce. And then thus far we've seen. In fact, today Fortescue is one of the few stocks that's still in the green because iron ore is now at $106 a ton.
Mm.
So I didn't go into it with any great expectations. All I liked about it was that if I was right, you'd get a bit of a lift and a look at a big dividend. And if I was wrong, well, it was kind of priced in anyway, and I probably wasn't going to get hit in the stock itself. So I picked it up for my super fund with the yield in mind, but don't take it as a big thing. If iron ore goes down, I'll just get rid of it. But for the moment, Fortescue is very profitable, and they've got big cash flows coming through.
So you like Fortescue, you also touch on like big resource companies like BHP and Rio, and the fact that they might be too large to generate significant returns from, well, you mentioned copper exposure specifically, but how do you approach finding smaller players that still have solid fundamentals at play?
Well, that's where the Lassonde curve comes in. So with BHP and Rio and Fortescue, all you can really do is ride the price. So if you get a lift in iron ore or copper, then they will respond to that because their earnings go up. What I'm suggesting in the article and with this stock is that, well, copper may go up, but even if it holds flat, you can still get the lift in the share price from the company going into production. So it's like a second catalyst to the story. So there's multiple ways to win here. If copper goes on a big run, the stock will rally with it. If they go into production, it should rally as well, just because the market will see the cash flows coming in as well. And of course, the flip side is the risk is if copper gets dumped, well, this stock's going to get dumped too. So that's the risk that you run. But what I'm suggesting for the moment is both copper and iron ore are suggesting that they should hold around their current levels.
Yeah, and you don't mind a risk, do you, Cal? We've done
this is the whole thing with being in the share market. You've got to make strategic risk, right? There's always risk. It's just a matter is how big's the upside and how big's the downside. So in this case, I think you're getting a look, and we're talking short term here, but this is a story that'll go for 10 years. So you're getting a look at the starting gun on a well-known operator who's got his new operation about to go, and you can get on board right now and potentially go with him for the next decade.
Finally, you point out how commodities potentially becoming a hedge against other asset classes, similar to pre-2008. What market conditions would you need to align for this scenario to play out?
Well, I mean, so I allude to the gold price breaking out, and that's the market protecting itself from this is my analysis of it, of the systematic risk that's building around the world with Trump. Nobody's really sure what he's going to do. Will the international order sort of hold together? We've got Ukraine and Israel and all these flashpoints. But there's also a component of it that the market is very aware that the US deficit is not sustainable, and that therefore the Fed and the central banks around the world are probably going to have to keep financing these deficits because they're just so large. That's also part of what's driving up gold. But if you go back 10 years, I still remember Jim Rogers going, which was a similar dynamic now, famous commodity investor saying, you don't have to invest in gold if you just want exposure to hard assets. It will push up other hard assets as well. So if you want to be a bit like him, in fact, you would look at something that's more suppressed. So gold has gone on this big rally, not to say that you've missed it if you're not in it already, but it's already had a big run. I expect copper and the other metals to do something similar in the next few years, because liquidity will keep pumping into commodities because of the devaluation potential of what's going on around the world. They're hard assets.
Hard assets, that's the way. Hot commodities, that was his book
And
in the
strategic
1970s.
hot commodities and
Yeah.
strategic assets, of course. So
Actually,
copper, and
no.
if you
Hot
look at the big
commodities.
boys,
That was early. That was in the mid 2000s, wasn't
2004,
it?
he wrote
Yeah,
that.
yeah. But he's, yeah. Ah, good old Jim Rogers. I think you've interviewed him in the past, haven't you?
I have, yes.
Yeah. Good old mate. All right, you sound a
Yeah.
bit husky today, Cal. What's
Yeah, well,
going
there's
on?
a bug going around the house. The daughter's giving it to everybody, so I'm next in line by the looks.
Well, thanks for taking the time, and I'm glad you got through it. I'll see you next Wednesday. Back to the usual slot. So, back to the usual slot.
Absolutely. See you then.